Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Monday, April 24th, 2023. Please click like if you would, if you haven't already. Appreciate it a great deal. Helps us get found on YouTube. Also, subscribe to the Wicked Stocks YouTube channel. You'll be notified each and every time new content has been uploaded for your viewing. That includes the daily Tesla and the daily Apple report. And the occasional stock pick. Last week was end phase. And check end phase. I shouldn't, roughshod over that. We put out a stock pick last week that is actually still relevant in end phase. You may check that out. It's free on the YouTube channel. And if you do see it, just know that we do 2 of those every week that never land on YouTube. It's part of our subscription package with wickedstocks.com, where we offer a full assortment of daily and weekly video analysis just like this, daily triple Q, daily SPY report, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as 2 individual stock picks every week. And we offer a 5-day money back, 5-day free trial, actually. Anyway, let's jump to the charts. This is a weekly bar chart. This shows, and you're familiar with this if you've been watching the Daily Tesla Report now for the last few months. Since the January low, we have the formation of a channel top. Actually, the January low was the channel bottom, in essence, off of these highs here, projected against this extreme preceding low. And it snagged the January low. Following that test, well, not following that test, I'm going to jump to this chart. We pushed through this intermediate structure here. So this is kind of the way I'm framing this is that the 139, 147 area is our base of midterm support. We can fall into this zone or come close to it. Actually, we can. I'll get to that in a moment. I actually, more precisely, if you look lower right, this is our area, 146.06 to 154.38. That is our base of support, a midterm that can contain selling through May, possibly into the third quarter. And from there, we can rotate up to this significant 223.54 channel top, which now has new channel resistance midterm based in part on last week's low in the 209.61 area. This area is all gradually converging, and by late May it will all come together. So if the low from last week is good and we trade up from here, this is going to be our significant zone. I'll get to that actually in a moment. But if we were to break this area, and I don't think we have to break 139.02, but I do think if we do break 147.13 in combination with other things on the daily chart at 146.06 to 154.38, then we enter a serious sell phase once again. I don't know about 54.17 to 65.87 as a likely target. I'm reluctant to call it that, but I do think a return to that low area from January around 101 and change would be likely. So let's move on to the other charts. I'm going to walk through the daily chart now. And if you've been watching for the last few weeks, you know that we entered a sell signal about 2 weeks ago when we closed below this wild day here where we opened higher, closed lower. That was the sell signal day. Prior to that, we broke below this channel structure, but didn't close below it. Then we closed below it, held nicely, and the big sell-off. And so now we are approaching meaningful support at 154.38. Simple channel bottom that I have as if you look lower right, 4-star support. 4-star support is multi-week, can contain monthly selling pressures. In other words, through May, in combination with 146.06, which is a 5/8 downside Fibonacci from the January low against the February high. This is our range, gradually narrowing, and it is also, once again, part of that zone of support, 147.13 for the week itself. You can see lower right here that it all kind of comes together in that zone. So right now, I'll jump to the day itself. We have a descending channel bottom that we did actually test on Thursday of last week, slipped below it. I had it as a session containment level at the time. On Friday, I reduced it to minor only, and I still have it as minor only. If you look lower right, it is a minor level that if we violate it, and that's where I say all the minor levels have meaning. I just don't like to crowd them out. I like to I really like to focus on the big areas. So breaking 158.01 today should result in an actual test of the 154.38 channel bottom, part of a range of support down to 146.06. This is bottom picking territory for those of you who are itching to go long Tesla. I don't know if anybody's itching right now to go long based on what's been happening in the last couple of days, but this is where you sort of stick your neck out. In any event, if you've been short the market, and I've been advising the purchase over the last few weeks of out of the money puts, 145s, 155s. I say a little bit different every time based on these formations. But if you have bought any of those out of the money puts in recent weeks, this is also your profit taking area where you would close that position out. And at that time, when we test this area, that would be actually a good time to reach for, well, I'm going to pick some points here on the daily chart. If you're a short-term trader, in other words, a 1 to 2 week position trader, you might reach for 175, 178, out of the money calls, these areas coming down. This is kind of a weekly resistance area that you can see here to the right. This is pullback resistance that could contain buying into next week, and we can fall off again from there. From there, back to into the 154.38 region. So that's what I'm seeing here. So that's the near-term play. If we dip into the 146.06 to 154.38 area, you could reach for those it depends. These areas are dropping, but I would say just round it up to 178 out of the money calls that don't expire for at least a week. You might go a few weeks out. Or if you're a longer-term position trader and you're covering those puts in the 154.38 region, you could consider buying, here again, it could be 210. It could be, this line here is around 205. I would say 210 out of the money calls that don't expire for at least a couple of months. And I say 210 because I'll go back to this chart here that I started at the beginning, that this structure, this is the same one that I just showed on the daily chart, it all comes together. This 223.54 is dropping into the 210 area by late May, and this horizontal structure is 209.61 right now. So I'll go back to this chart and show you that, yes, 210 would be realistic as 223.54 is dropping through time, kind of like this. It's actually probably more like this. And so, yes, so getting back to what to do if you're a longer term options trader, if you hold option trades for at least a month, maybe you go several months out, as we dip into the 146.06 to 154.38 region, you could consider buying 210 out of the money calls that don't expire for at least a couple of months. We do need to get up and over this 177.80 to 179.97 region to indicate a good low into later May, and then I would expect several weeks recovery into that 210 area, so it could be sooner than several months. Let's cover the day itself. I still have 169.70 as the high of the low. Thursday was the pullback low. It actually was the lowest the market had been since the February high, and so it has some meaning in terms of pivot point quality. Pushing through 169.70, and it's just an intraday resistance area, as you can see lower right. It can contain intraday strength, and we can fall off from there for the day. I was close to calling this session containment, but I don't think it has. I think this market, because we came relatively close to testing meaningful support on excuse me, we tested this channel bottom. We did not come close to testing this targeted channel bottom. That is still in play, of course, and that is still expected. But let me go back to this chart here. 169.70 can contain intraday strength, and we can fall off from there possibly for the day itself. If we push through 169.70, this market can short cover its way into the 177.80 to 179.97 region, perhaps within the day. That would be a strong rally above 169.70. Excuse me again, where the 177.80 to 179.97 region can contain weekly buying pressure. So in terms of the 3 to 5 day swing trade, if we happen to push into the upper 170s over the next few days, it is your area to set a short or to take profits on a long if that happens to be the case. But this is also a short selling area. If we push into the 177.80 to 179.97 area, changing a little bit every day over the next few days, that is an opportunity once again to reach for 155 out of the money puts. I wish I could put everything on one chart. It's just like impossible. It looks like a big mess. It might look like a big mess to you anyway, even this one. But if we push into the upper 170s, this 177.80 to 179.97 area over the next few days, you could reach for 155 out of the money puts that don't expire for at least a week or two. And kind of the last thing I'll say, I hope I covered everything well here today, is if we do close above 179.97, we do have a good April low, and I would expect several weeks bullish continuation to this 212.07 area up to 223.58. Just a reminder that by the end of May, it all comes together in this zone here. We'll be watching it on a day-by-day, week-by-week basis. I think that pretty much covers it for Monday's Tesla. I'll be back tomorrow with Tuesdays, of course. I'll leave you with this chart here. I think it's the most relevant for the day. And that's all I got. I'll talk to you soon.